Isaiah 54, no weapon formed against me shall prosper. Tell yourself Deuteronomy 28, I am the head and not the tail. Tell yourself Psalm 18, the Lord is my rock and my fortress and my deliverer. Tell yourself Psalm 20, some trust in chariots and some trust in horses, but we will remember the name of the Lord. Tell yourself Romans 8:37.
Yesterday, I took a trade on BTC USDT, and I want to do a breakdown on the reason why I took that trade. This is a live Bitcoin chart on TradingView. Right now I'm live and I'm looking at the chart, and if it gives me my setup, I'm going short. So at this moment I'm going to do a breakdown of the trade I did yesterday. Okay, so I woke up yesterday and then I saw this move on the 15 minutes time frame. I saw this is a level of, this is a point in the market where retail sell stops will be residing, and I saw the liquidity there. I took it like a sell stop, like where liquidity is in the market, and then I wanted to see some kind of rejection there, and I saw this happening. I didn't see all of this, but when I saw the chart, it was already like this broken market structure here already. Broken market structure here already. Exactly, I just saw this as a breaking market structure. I saw this as a breaking market structure, and then ideally I would like to sell short. Like had it been that the market just went up like this and then retraced back down from this particular area in price back down to this somewhere around here, I would have gone long, but it didn't. It just did some level of consolidation around this area, like it went up, it went down, it went up, it went down. So I like to see this in the chart. When I see this happening, I just know that this is what we call building of liquidity. This is engineering liquidity by the smart money. So for individuals that don't know what exactly they're looking for in the chart to want to go long, taking this as support, I want to go long, seeing some levels of rejections there and all. For me, I don't do that. I like to see the markets do something like this around the 50% of the Fibonacci. Around the 50% of the Fibonacci, or maybe somehow close to it. So you see around the 50% of the Fibonacci. So the markets will just have to sometimes retrace it around that area and then consolidates for some time before it goes the other direction, before it goes down, in order to take stop losses, in order to trigger people on sell stops, and before it start going into the main direction which it has intended to do in the first place. So basically, when I saw this happening yesterday, I took a trade. Yes, I'm going to show you guys the trade I took. You can see my executions around here. This is where I bought first of all 3 BTC, and then I bought 1 second of all, and then I as the market was going, I was just taking partial profits and all. So I'm still watching this market. I'm going to go short soon. So let's see if the market is actually giving us entry right there. Okay, it's still there. I could go long here right now when the market hits this fair value gap, but my profit parameter in BTC is just like 1.5%. So I take 20x leverage to execute every trade, looking for just at least 1.5. What I've done, the risk to reward is just like 0.80%. 0.8%, so it's nothing. So I wouldn't take that trade. So I would like to go for the one with a good risk to reward, which is the sell, not the buy. So let's go back to what we were discussing before. Okay, so yesterday the market did this, and then it did this. It printed this lows, this 1, 2, 3. This is for retail traders that don't know exactly what they are looking for. We are all retail traders, yes, but some of us who know how the smart money operates with them. So them they engineer liquidity here, like they touch this area and then it went back up. Some people who don't know will say this is a break in market structure, and then they'll take this as a fair value gap, as an ICT fair value gap. But that's not correct, because it is based on what ICT is teaching us here on YouTube Mentorship 2022. This is so expensive for you to buy, so you have to wait for the market to come to cheap area. That's the discount price for you to go long in. So the market did this. It came to this point, it bounced off of it, and then it came back again, and then now it bounced off of it, showing rejection. This is the hanging man. I don't know what they call it. This is a hammer. This is a hammer. This is a hammer. Some people who don't know what they're looking for, they will just go long immediately and then put their stop loss somewhere around here, and then the market will just go up a little bit and then come back down, and then trigger everybody's stop loss, and then you're out of the trade. Then after a few minutes, you see the market going back to the direction which you had predicted earlier, and then you start beating and then trying to kill yourself over the trade that you missed, that you actually right in. So basically, how would I take this trade? How would you take the trade rather? You see this happening. You join a Fibonacci from this particular swing low, the price leg that broke the market structure. Is this stuff, that is this particular price at the moment, the price action at the moment, is it above the 50% of the Fibonacci? If that's yes, don't take the trade. But if it is below, then that's when you can actually think of taking a trade, looking for whatever thing that triggers you in entering the market. Yeah, what triggers me to enter the market? You see this thing happening around here. I see this as what? Engineered sell side liquidity. I see this as what? Engineered sell side liquidity. Like the engineering the liquidity, so that people that don't know, traders that don't know exactly what they are looking for in the chart, we just go in the chart and then want to look for what? Buy setups, buy setups, buy setups, and then they will take the chart the other way around and then stop everybody else. But you have to see that as liquidity. And remember what I should say. When you see, just mark up your liquidity highs and lows in the market. When the market hits that area, then you drop down to a lower time frame than that where you were looking at the market to look for what? A particular setup which he tagged as turtle soup. Look for a swing high to get broken, and then after which look for a fair value gap to frame your entry in. So this is what I saw yesterday. There's a fair value gap here already. There's a big fair value gap here which is somehow below the 50%, and then there's a tiny one here too. The fair value gap which is there, which you can actually enter on limits, but I don't do that. I have to I like to refrain. I like to take my entry with a very small stop loss. Still doing the right thing in the market. That's a fair value gap in the market. Okay, right now my alert has been triggered that BTC has gotten to where I'd like to see it start dropping. So I will show you guys right now. I will execute live if I see my setup, and then you see what I'm looking for in the chart. So basically yesterday, the market got to this fair value gap on a 15 minutes time frame. It hits it, taking out liquidity already. Like it took out this area of sell stops in the market, this area of retail sell stops and retail stop losses and whatever. And then when the market hits this area, this is a fair value gap. I took that as a fair value gap, as a fair value gap, which is the imbalance in the market. So when the market got to it, I didn't execute immediately. Then I dropped down to 3 minutes, looking for my setup to form. So once I got to that area, once the market was around that area in chart, so this was the liquidity we highlighted from the 15 minutes time frame, and then the market got to the fair value gap in the 15 minutes, still below 50%, and then he hits it here. He broke structure. Now we're done with all of these things. So let me take this out so we don't confuse ourselves what we're looking for. So he hits it market came to the fair value gap, it rejected. You could go long here, yes, but take trades that are highly probable and then with low risk, because in the market we're not in the market to lose money. We're in the market to actually make the best trading decisions and with the minimum risk. So once this happened, it came here and then it broke. It came here, it rejected, and then here it broke structure. There was a break in market structure here because this particular swing high here got violated, it got broken. And then you look, once this happens, then you look within this area in charts here, from this particular price leg to the point where the market structure was broken. Is there a fair value gap that formed? If yes, that's where you execute. If yes, that's where you execute. Once you see this is the fair value gap. You highlight the fair value gap. Once the market hits it, I like to enter my market. I like to enter a trade once the market gets to 50% of the fair value gap, which ICT tagged as what? Consequent encroachment. So once the market, as this particular candle was printing, when it got to 50% of this fair value gap, I went long. You see there, I bought three BTC, like 3 contracts of Bitcoin at 28,937.81. My stop loss was here, and I went long here immediately. And then I entered again here, and then I took some partials off of this particular long that I took here. So this stuff came here, the market came here, and then I went long. Why did I go long? Because there's what? A fair value gap here after a structure break, after taking out liquidity somewhere around here, which you all saw, and then it came here, you rejected, and then you broke structure. You look for what? Fair value gap, and then after you see the fair value gap, then you enter as the market is hitting it. Say you don't trust the fact that the candle is printing here, and then you want to go long. Once you see this happening, so many of you who trade candlestick pattern, this is exactly the area in price where you can use your candlestick formation to actually execute in the market. So say you see this, that this is a hammer, you can go long, or say you want to use an engulfing candle. After this particular candle closes, you can also still go long, or you can put a buy stop above this particular candle's high. This one will be triggering. This is the market. This is the point where you'll be triggered in the market. But I went long here. I took some partials off here, and then I closed almost everything. I closed everything around at this particular candle's high. This is where I sold all my contracts. So this is the perfect way for you to actually execute and take the trades and execute what ICT is teaching us in the Forex, in the YouTube ICT free mentorship content on YouTube currently. So you look for areas in the market where the market could actually be what? Be manipulated. That's areas in the market that there are pool of liquidity, like let's say sell stops or buy stops, and then you look for your entries to form above it or below it. Say you want to go short, you look for what? Look for setups to form above old highs. You look for setups to form below old lows if you want to go long. And then you enter your market, enter the trades when the market hits a fair value gap in the chart. So try and do this, backtest this strategy. This is what ICT is doing, and this has changed lots of lives here. And thank you, ICT. I thank you, Michael. This is one of the best and simple, most refined system of trading. So I just hope everybody learns from this, and if this meets your, if this has helped, if this I'm actually talking right now helps you to refine your entry setup, entry strategy, please do me the favor of hitting the subscribe button on the YouTube channel, because I'm trying to run this account. Thank you, and I hope you have a blessed, and I hope you have a blessed week and a good trading. I hope you have a blessed week and good trades to take. Have a nice